it's going on. Just a minute. I'm just setting up the meeting for YouTube Live. Yep. It's on. And search funder. Click here. Here. Update. Okay. Here. Okay. Okay, I think we are live. Awesome. Okay, so welcome. Where are you, James?
Well, I'm in New York, so I'm a bit of a gatecrasher to this networking event. But I lived in the Bay Area for 15 years before moving to New York about 8 years ago, and I'm interested in buying a business in the Bay Area, and hopefully we'll move back at some point soon.
Awesome. And where is your accent from?
I'm originally from England.
Okay. Yeah. I have a business partner, and hi, Adam. Welcome. And
Hi, everyone.
Welcome. So I have a business partner in the Bay in Orange County, Los Angeles. He is from UK. He's also like me, moved in from Canada, and he and I are looking at businesses all the time together. So I can now guess where the accent is from. Okay. By the way, just to have the conversation going. One thing which he tells me is that I don't know, maybe others have, because I have a heavy accent myself, but my accent doesn't open the doors. But he told me that English accent actually opens many doors in the US. I don't know whether it is true or not.
Well, we'll find out as the search goes on. I mean, I'll keep you posted.
Thank you. Hi, Mark. Welcome.
Hey, Sandeep. How are you? It's nice to meet you all.
Nice meeting you all. And Eric is here. He's driving, and Nayab is my business partner and friend. So I've invited him. He's also in the Bay Area. And every time, I have been doing it for the last few weeks. Every 2 weeks, I do it for like 4th or 5th. Every time the new people join in, and it's always good. I hope somebody from the previous one also joined. Mark and I have met before, it seems.
Yeah, I want to say it was last summer.
Okay. Yes. Okay. Awesome. So I'll give you. Let's go with the introductions a little bit, and then we go deep into our discussions and see how and what all are doing and how we can help each other, and challenges and all that we can discuss. I'll go with myself first. I can say I usually say I'm an Indian-born Canadian living in California. That's how I traveled. And I have 25 plus years of corporate experience, but for the last 4 years, I'm on my entrepreneurial journey, 1 year into searching. I've not closed any deal yet, but I'm constantly these days, I'm very near, because every week one LOI or else is going on. So I have now enough pipeline that I'm feeling a little happy, little happier now that yes, something is happening. And I'll tell you about my learning, why it took me a year and what was my mistake later on, and we can go ahead. So I will ask as I see people on my screen. So James, you're in the left top corner. Can you tell something about yourself?
Yeah, sure. So, I've had a 30 plus year career in the finance industry. Most recently, 18 years at Morgan Stanley. I left Morgan Stanley at the end of 2022. And I'm very early on in the process of searching for a business to buy as a means to fulfilling a lifelong passion for small business. And I've got a sort of an entrepreneurial itch that I need to scratch before I retire. I wrote my first LOI at the end of 2021, which didn't go anywhere. The seller had a a very different view of the valuation of his business than I had. And it turned out that in fact he had received an offer on his business from a strategic buyer, which kind of, set his expectations, I think unreasonably high. Anyway, going through that experience really kind of opened my eyes to the search world, and I'm really just sort of looking to build my network in this world, and glean sort of some advice and some experience from people that have been through it. So I'm excited to be a part of this conversation.
Awesome, thank you. And Eric? We don't hear you.
On mute.
Yeah.
Hey guys. So I am looking at the search world from two different lenses. One is to be a service provider as a resource for some searchers that are not as experienced in finance when they're doing, their due diligence process. My skill set is in financial modeling, diligence, and I worked at a long-short equity hedge fund for several years, and now I'm sort of like on my own entrepreneurial journey, and kind of figuring things out as I go. But I'm looking to get involved from a service provider perspective to do quality of earnings analysis, or just kind of see how I can be helpful to the search fund community from a finance perspective. And then separately, I'm interested longer term in also buying a business, maybe outsourced accounting focused type business. So yeah, happy to kind of learn from you guys, and I'm pretty new in the whole journey, and that's pretty much it. So thanks for having it.
Thank you, Eric. Thank you, Eric. And Adam?
All right. Hi, everyone. I'm Adam. I'm currently getting my MBA at Columbia University in New York. I used to live in California before school, hoping to get back there, and I'm in the very early stages of raising a search fund, traditional search fund right now. So the plan would be to raise the fund, go back to California, and get off to the races. So just here to meet some other searchers in California, kind of hear how things have been going for you guys, and just kind of learn some more about the whole search process.
Awesome. Thank you, Adam. And Nayab?
Hi, everybody. Very nice meeting you, and thanks, Sandeep, for inviting me. In fact, Sandeep and I are working together. I've got a background in finance, almost 27, 28 years now. Originally from Pakistan, happened to spend quite a bit of time working in Pakistan and Middle East, and now in the US. Had an opportunity to work James in London for quite some time as well, and Asia Pacific, Singapore. So I've been through quite a long journey. I've been working with companies like Visa, Meta, investment banking experience for around 5 years, and now into the consulting world, trying to help out both startups, small and medium-sized businesses, in terms of very similar to what Eric is trying to do. So basically, helping businesses scale, grow, and make themselves much more stronger.
Yeah, awesome. Thank you, Nayab. And Mark?
Cool. Excuse me. So like James, got 25 plus years of corporate experience, big companies, small companies, and just a little bit tired of the ladder climbing BS, and wanna kind of be my own boss per se. So that's kind of what, and don't want to do another startup. I've done a few startups, neither of them really took off. We had one acquisition, but it wasn't life changing at all by any stretch. So, but I like small environments, and that's what's kind of lead me towards acquiring a small business. So I think Sandeep, we met because I had a couple of LOIs, and I had in my journey so far, I've had two LOIs signed, and one of them I was doing a fundraising for, and I think that's where we met, Sandeep, when I put out a query on that. And so both those fell through just during due diligence. Seller neither of the sellers divulged some pretty key information about their businesses that made it non-viable. So so I had to pull out of those. So I've got like Sandeep, I've got a funnel here of a few things that are interesting. Now I got to figure out if I can pull them together on them or not.
Yeah.
So
Awesome.
I'm here to just network, learn
Yeah.
stuff. I'm learning a lot about this process. I come from more operational experience. I don't come from a private equity or finance experience. So that whole of that process of getting the deal executed from the finance is something that I'm learning about all the time.
And I always when I always tell this as a joke, but actually this happened when I joined my first job, and one of the senior guy in 25 years back in India said, "You are joining as a management trainee." I was in the sales at that time. He said, "You need to be friends with two people in life as a career person in a company. One is a HR and the other is finance person." So when I met Naab, I just wooed him as my friend, and I said, you need to be on my right side because Eric was right. Financial modeling and figuring out all these data points and whether I'm calculating the right EBITDA and all that, and then looking at the balance sheet, cash flow statements, and all that. You can intuitively know this is right or wrong, but being confident is a different ball game. So that's where these specialists come in, and thank you for both of them for joining. I would like to start the conversation on another thing and I'll start the conversation with my learning of 1 year and where did I go wrong and why did it took me so long to get to where I am right now. So I went through I will not name the training program or something which people these days, talk about training on searching and all that. So a year and a half back, and those people put that thing in my mind so firmly that searching on Biz Buy Sell is a waste of time. And the second thing they told me was that the brokers are mostly rogue people, that we should not talk to them. So I just, I was trying to find, and later I realized after 7-8 months that I'm sending letters, emails, and all that, even though, and phone calls and offshore center for making phone calls, all that effort happened for 7-8 months, and nothing great happened because I think I was trying to find a needle in the haystack, and I didn't even realize that those people who I even come across, maybe who responds to me, may not be even at the right time to sell, right? So that was a learning for me. I hope you have better success if you were doing that route. And I have now, around 2 months back, I have started looking at Biz Buy Sell and brokers and all that. So lots of brokers on filling in my pipeline, and I am evaluating deals almost on a daily basis now. So that's my learning. And anybody else want to comment on this and then share their own? Yeah, James.
I got tapped in pretty early to a site called Axial. I don't know whether anybody else has used them, but they're sort of almost an aggregator of business listings, and I found that to be a pretty effective way of sourcing potential deals. The one thing I've found though is that business brokers are very unreliable in getting back to you. You sign an NDA, and that NDA just kind of goes into the ether, and often you just don't see the offering memorandum, which is frustrating. But anyway, Axial seems to me to be a good source. And I guess the other thing I would just say is that I do worry a little bit about whether sort of sourcing businesses on Biz Buy Sell or some of the other broker networks, whether you're really seeing the sort of quality of business that you want to buy. And particularly Biz Buy Sell, I think just has a lot of very generic sort of small businesses that maybe are not the businesses that sort of this community is really interested in buying.
I agree with you.
Yeah.
Just yeah, go ahead, Mark.
No, I agree. I didn't do the proprietary search for a lot of reasons you were articulating, Sandeep. I didn't have the infrastructure set up, and after reading and listening to how other folks that do some of these proprietary searches, it sounds like they getting the infrastructure and the data and the process and was a lot, and I didn't have that, and so and I wanted to go with more people that were ready to sell versus and had gone through the mental leap to get there and were being coached by some decent brokers that on how to on what the valuation might be. I definitely have seen there's some good brokerages out there and some ones that really let the sellers kind of set an unrealistic expectation. There's a few that really keep the sellers kind of in reality. So I've definitely noticed there's differences there.
Mark, are you able to share the names of any of those brokers?
Yeah, I mean, like Generational. Have you done any? Looked at them? Like I've worked with a few deals with them, and they're it's an auction process, but they do so it's not, they don't put a list price, but they do establish a reality check with the seller. There's a few others I can certainly share. I have them like bookmarked in like the 200 tabs I have open, but yeah. But there's another one that's all of them are completely unrealistic. All the sellers, like there's one I'll find as well, Business Exits or something like that, and all the deals are way overvalued, and the ad backs that are stuffed in there, you're just like, it's like 20, 30, 40% ad backs. I'm like, I'm not going to spend the money to go validate that nonsense, right? Yeah. It's just going to be too burdensome.
Yeah. Adam,
but they're cool companies and they got a cool product, right? But it's just like, you just can't, right? I can't do it.
Yeah.
I'm not going to bear that burden.
What do you feel like is like a EBITDA multiple that is being overly valued? Like, where do you see the market right now?
Yeah, I mean, some of these were so just to give you an example, there's one brokerage, they had these brokers and they put a ton of ad backs in, like I said, 20-30% of their SDE consists of ad back, and then they're doing a 6 to 8 multiple on top of that, which it just doesn't, you just can't make the numbers work on something like that. And and then I pursued a couple of them and put in some LIs, but they were like, oh, seller really believes it's worth this, and I'm like, okay, I can't get there.
Yeah,
they're still in the market.
And to go and we'll go into the ad backs a little bit, but and then let's talk to Adam. Do you have any thing to say about what we were talking about before?
I'm still in the process of going to be raising money from us investors, so I haven't really scratched the surface of sourcing deals at the moment. Okay. But interested to hear the commentary.
Yeah, awesome. And Nab, can we go into the ad backs now a little bit, and then because he has been helping me understand a lot of ad backs. I agree with you, Mark, that when you see ad backs like hotel expenses, meal expenses. Now, how do you know that the meal expenses? No, this is all the owner's expenses. Now, if he's bringing pizza and parties for the business and for the employees, that also gets into that, right? So then there is telephone expenses. I don't know, how can you say that telephone expenses are not related to the business if he is the CEO of the company? Then car expenses. I know if he or she is driving a Mercedes, which is unrelated, we can still understand it, but not a truck, right? So that's I agree with you. There are so many ad backs added there, but there are a few brokers. I'm reviewing a sim. I won't be able to share the broker openly here because I don't want to be advertised right now. But But I was very happy to see that there was no phone added, no personal meal expenses added, and I was surprised, and then suddenly you start trusting that broker a little more, and that's my take on that. James or Eric? Nayab?
Yeah, so basically it all depends upon like it devil lies in the details. And a PNL is a PNL, right? Whatever these brokers send out to you, if you compare one company to another, they're pretty much like aligned, except for the quantum of the amount that you're looking at. If you look at the construct of it, they're pretty much aligned. Why? Because these brokers, most of the time, they are putting these requests across to the sellers, and they're preparing it according to their requests, and that's what they're presenting to us. So if you just go by the face value of those P&Ls, I mean, we'll not get much. So unless and until we don't go deeper into that and try to sort of link things together, which means if this is the type of business, does this type of business really need a lot of calls to be made, and that's why the telephone bill is so high? Or it's just a walk-in, we've got walk-in clients, so which means there is no need for all these hefty telephone bills. Likewise, travel. They're always, building travel on top of their costs. If the business doesn't need to somebody to travel, why the travel cost should be there? So it's just like I've been linking the business model with the financial, if it makes sense or not. Otherwise, P&Ls are P&Ls. You just like look at the ratio analysis, see what is the top line, what is the bottom line, what is the SDE, how much is he taking for himself, what is the number of employees, and here you go. So unless you don't really try to link together the business model with the financial, it won't make sense.
Awesome, thank you. James?
Yeah, I find this topic a tough one because, I think the broker community conflates multiples of EBITDA with multiples of seller discretionary earnings. And I think, they're applying the same multiple to each, which is probably, from my perspective anyway, is not the right way to look at it. The one business that I wrote an LOI on, I was in discussions with Live Oak Bank for SBA funding, and they basically said to me, we don't accept, owner salaries as an add back, which is completely fair when you think that you've got to pay yourself something or, pay somebody else to run the business. So, I find this whole concept of SDE or adjusted EBITDA that includes an add back for the owner's salary, tricky to sort of rationalize really, as a buyer of a business anyway.
Yeah.
Well,
Go ahead, Eric.
Yeah. I mean, I did a sort of mini Q of E for a seller recently, and it was basically just a recast of their EBITDA, and it was an interesting exercise. But I would say, yeah, I mean, obviously, if you buy a business, right, you can't add back the owner's salary if then you're going to go buy it and take another owner's salary, because then why would the lender approve that? But you should add, if they're taking a $300,000 salary and it's over market, you should add back the excess, right? So like,
Exactly.
if you're going to then take $100,000, so then you should add back the excess owner's salary, right? But the way I would think about the add backs are they one time in nature, right? Those are pretty clearly add backs, like weather related stuff or conferences, things like that. And then second, are they discretionary? And to the extent that they're discretionary, like how discretionary are they, right? So like, that's how I would think about it. Like that's, there were things that I looked at that were clearly one time, right? They spent $75,000 on conferences. So we added that back and the buyer was okay with that. There's other things that are sort of discretionary, but like unclear if they're going to continue going forward. Those are sort of like question marks, but like, I agree, like telephone bills, that's pretty obvious, like, going to continue kind of thing. But yeah, for the owner's salary, I would just take an excess amount, if they're taking excess amount, and then other than that, I would just try to evaluate it based on, are they one time in nature, and then are they so discretionary that they're not going to continue going forward, right?
Yeah. No, that's helpful. And I mean, I'm looking at a business right now where they were paying family members, non-working family members. And so that's an obvious, and totally acceptable add back, as an example,
Yeah, yeah.
Yeah. I
So
think some of them, where I was put off by they would they would aggregate a bunch of stuff under miscellaneous owner expenses. And I think they were just running through, their grocery bills, and,
Yeah.
everything. And like, I get it. It's an SMB, right? They're trying to minimize taxes and everything like that. But I wish they would go through
and
it's hard for me to go pay to validate all that. Right?
so yeah, no, let's move on to two more topics which I have in mind. One is related to valuation of the companies, and the other one is we wanted to, okay, so I just forgot about it, but let's go for the valuation. What I have been doing recently after seeing unrealistic assumptions from the brokers, I have been just quietly with my LOI sending them a link from BizBuySell Insight reports, which is there on their website. And it usually tells you that the manufacturing industry of this sort is at 3 multiple or 3.5 multiple, whereas that guy, that broker, is thinking of charging for manufacturing 9, 8, 9, or 11 multiple. So, when you go back, it hurts him or her to see that your valuation of the company is less than 50% of their list price, but what can you do when BizBuySell is saying the same thing? I add that. And then I have also been using a screenshot from BVR transactions, and say, this is what is being sold. Now, I'm not saying I am successful, but this is one technique I have been using to tell them the market, what market is saying. What do you have anything to say or add to this?
I literally spent the last 2 days driving from Nashville to New York City, and I was listening to Walker Diebel's book Buy Then Build, and he's got some really great perspective on valuation in that book, and was sort of talking about a multiple range of 3 to 6 for businesses generating less than 2 million in EBITDA. And he gave a very kind of clear idea of how you make adjustments on the multiple that you should be paying of EBITDA based on, things like kind of recent revenue growth, quality of earnings, whether the business has a sort of a branded service or a branded product. And so I think a lot of those sort of things should come into play as you think about what the right multiple is to pay for a business.
Okay. Anybody else?
Yeah, I think these multiples are first of all, they are indicative, not absolute. Secondly, they're more of they're historical depiction of what has happened in past. It can be a stake in the ground, but it can't be the only indicator of your offer to the seller. And there's so many aspects to it, as James is talking about. Like, for instance, if you're buying a restaurant outside the city is not equivalent to a restaurant inside the city in the hub. A restaurant which is inside the hub with no parking lot available nearby is not equivalent to one which has got parking space available, right? So there's so many different business aspects that have to be looked into while we are making an offer. So I think, Sandeep, you're doing a great job, at least, showing the historical, indicators. But at the same time, every business is different, every business is unique, and they've got their own, unique selling points. So they have to be definitely baked into these multiples whenever we are making offers.
And just to add that I'm willing to pay a premium for those things if, like, for a niche manufacturing or for niche product which has potential and all that, but certainly not the 3 times more multiple than actually the market suggests.
Exactly.
I think James, Eric, Mark, jump in. Hey, welcome, John.
Thank you. Good to see you, Sandeep.
Good to see you. Good to see you. And we'll talk about your search funder post in a minute so that everybody on Earth find out what you're searching in Los Angeles area.
Awesome. Thank you.
Okay.
I mean, Sandeep, I would just share sort of the experience I had with this one company that I wrote an LOI on, and I accept that it's a limited sample size, but I offered 5 times adjusted EBITDA, which is at the high end of the range that sort of small businesses trade at. But I kind of view that as a reasonable multiple, given that the business imported and distributed a consumer product that had a recognized brand name, right? So, I thought 5 times for a business like that, was acceptable, even though it was at the high end of the range of multiples that typically you would see for these kind of businesses.
Yeah.
Yeah, it's interesting.
Mark.
So I mean, James, I was trying to get some idea of a multiple, and for business that I was, there was no asking price. It was a bit of an auction process. I didn't really, I was trying to gauge generally. So I put in some queries to a couple bankers that, just to get an idea of, hey, what are you guys seeing in this range? And they sent me back, one of the bankers at Live Oak Bank sent back a scorecard, and they have some stuff put in there, some subjective criteria already in there, and it's a weighted scorecard. And then they've kind of, based on their experience, kind of depends upon the weights, and they does some simple math, kind of comes up with these different scores, and kind of gives you a multiple range. Kind of, I'm happy to share it as well. And it just gave me gave me some insight into how they might look at it, if they were going to underwrite it, and if they were going to ask me to do this, what I might do. I'm happy to, like I said, I'm happy to share it as well.
That'd be great. Would love to see that.
How are you guys thinking about time to close? Like, right, you can go to a broker and you can find a business and you can overpay and you can get the deal done. But obviously, like, you don't want to pay too much. So, like, how much of a factor for you guys is like just getting the deal done quickly versus being willing to kind of wait for the right thing?
There is no right answer for this. In my opinion, it is all about opportunity cost. If you ask me, I have waited, and now I didn't know I will wait for 1 year, right? But if you ask me, I want to. I'm very angry at myself. Why didn't I decide on something a year back? And I would have definitely gone in for that. But had I gone in a hurry and messed up a deal with something, that would have been more disastrous. So I don't know what it is, but I think the time, I agree with you that the timing is all personal, and if somebody has patience and some other things going on in life, then yeah, wait for some more time. And by the way, I also watch very regularly a podcast on YouTube, and this guy is Acquiring Minds, and he's very active searching on Search Funder. That's a fabulous episodes, but he interviews a lot of searchers. So I learned from these episodes that they're usually the search time is around 6 to 18 months. Now, sometimes people are lucky about within 6 months. Sometimes it takes around to 18 months if to get the right deal. What do you, anybody else?
I mean, I agree with you, Sandeep. I think finding the right deal. I mean, for me personally, this will be the first deal that I've done, and I think it's imperative that I find the right deal, a business that I can sort of feel proud to own and align myself with. And I hope this would be the first of many, but finding the right one is, to me, more important than rushing in and buying, being worried about the timing and buying the wrong business.
Okay. Thank you, Mark, for sharing the spreadsheet. And some of us have shared our LinkedIn links on the chat. So please reach out to each and everyone and then connect. Mark, you want to say something here?
I'm similar boat
Then-
as James.
Okay.
As I'm a little further on in my career, so I don't know if I have too many more at bats at these. So I got to be pretty selective at what I pick.
Same here. So
Yeah.
I want to move on to our next topic, which I have in mind, and I've recently realized, and while doing a analysis of a company, the SBA interest rates have grown so much, and I actually closed my eyes towards it, and I realized when it went further, and I asked, it's around 10 to 11% now. Have you guys looked into it? So if a business which looks like solid business and they're after add backs and all that are making 11 to 13% net profit, so it doesn't after paying 11%, how much is left over for us, is my question. So how are you evaluating that kind of a scenario now when you are looking at businesses, because getting a 20% net profit business is a difficult one these days? James, so you start because you are on the left top corner.
Okay. I don't want to hog it, but no, I totally agree. I mean, I think it's definitely, when you look back a year ago, the SBA was offering loans at sort of 5.5 to 6%. So it's definitely a bigger hurdle to overcome. My conversations with banks that offer SBA funding suggests that more people are taking variable rate loans down than they were previously, and obviously, kind of a year ago, people were taking kind of fixed rate loans down. So, I mean, it depends on your view of where interest rates are going. But I think if I found a business that I needed to get an SBA loan to finance, I would still do it and take a variable rate loan in the expectation that rates should stabilize, if not actually come down. And if your business can support, debt at 10 or 11%, then you're going to be even better off, a year from now when rates, are 5 or 6%. I mean, that's kind of how I'm thinking about it.
Awesome.
Or-
John, jump in.
Yeah,
please.
I'm wondering, I'm a little early in my process. I'm planning on doing a self-funded search and I've looked at a few different businesses, but kind of finalizing my investment thesis before getting out and doing a full-time search. But is anyone sort of structured? I've heard, because of the interest rate increase, a lot of people are structuring more seller notes to make up for that, where sellers are happy to take a 7% note. So I don't know if you guys have been implementing that into your LOIs, but how do you guys feel about structuring seller notes, and have sellers been open to that?
We are hopeful, but I have yet to find that success where seller note is more than 10%. I would love to pay him 7%. And because one thing I've changed, one thing, and for my talking point, and I hope you guys also agree and maybe use that talking point to teach these brokers and sellers, is that I have been saying after SVB Bank's disastrous fallout, when it collapsed, right? I realized that we when we deposit our money in the bank, we always feel we are depositing it into a safe place and it is our money and they're going to be the custodians of it. But in fact, if you look at it from a financial angle, which Eric and Naab will confirm, that this is actually a loan to the bank. So I am going and depositing my money in my checking account or my term deposit. It is actually a loan to the bank, and bank is then utilizing it. So if we are lending to a bank like a regional bank and the small medium-sized bank, if the big banks are going down, small banks are going to go down. And I have been reading news that because of the commercial real estate collapse impending, coming up very soon, so these banks are going to be under. And if that happens, what will happen to their money and all that? So I've been utilizing it and say, what, it's better you give it to me at 7%. Your own business is at is this. If we don't show up, you get your business back. You know what? I'm trying my best, and I have not seen success, but I am hopeful we will see some kind of success in getting more seller finance on that. Any thoughts on that?
Yeah, so basically it depends upon the what do you call the WAC, the weighted average cost of capital. So what is the cost of capital for this business versus what is the cost of capital for the seller, and what is the opportunity out there for them to either invest in this particular business, which is like getting 7% versus putting it into a bank, which is in some cases risk free, but not in these circumstances with SVB going down and banks going underwater. So it all depends upon how do you play your deal with them, and how do you put this out in a way that they understand that what are their options like. If their options are to earn 7% versus put it out there risk free for 5, what makes more sense for them. And on the flip side of it, we also have to look at ourselves that, for instance, if we are putting it 80 versus 20, right? 20 we are putting ourselves 80 getting from SBA. And within that 80, how much can we extend so that we can, obtain seller finance? So it's basically a combination of 3-4 different, aspects that we have to look into.
Yeah, and I think about it, and I could easily be wrong. I think about it as the risk kind of. I think what people are considering when you look at the weighted average cost of capital, the risk-free rate, because treasuries you can get a treasury at a 4.5%. With the 4.5% yield, I look at that as kind of the risk-free rate, and then there's also a premium on top of that a seller would receive if they were investing in an asset that they're already familiar with by taking a 7% seller note is how I look at it. But they may not look at it that way, and it depends on what they're using the money for. If they're looking to invest the funds somewhere else, I feel like it's a decent argument.
Exactly. And
That's
second,
a good point.
absolutely. Absolutely. And this sorry, Mark, just one point. So this will also show their what do you call their confidence in their own asset. So for instance, if they're getting 4% from risk-free and they want to get 7%, are they really confident of this asset to generate that much money so that their risk is mitigated? So that is another litmus test of testing the capability of the business.
Yeah, absolutely.
Sandeep, I would add. I would just it comes down to is when you pop in a few rates and you can, in your financial model, and just does it the debt service coverage ratio. If you're looking at going out and getting debt, most of them want a 1.5 debt service coverage ratio. When you put it all in there, it all comes down to the valuation for me when you put it in there. So it eats out of the valuation at the end of the day in my model. And that's kind of like when I was saying, well, some of these just don't pencil out. They just it just doesn't work at 6. You just can't do the deal, right? Yeah. And 6 in terms of a multiple, right, with rates where they're at. Maybe 2 years ago when rates were much lower, but and how it ends up with me, and I explained that to him, like, it just doesn't finance it. It doesn't work.
Yeah, definitely. I was looking at LOI today, and I was trying to get that thing and actually showing it to the broker and say, at 11%, after all that, we are not even going to get even the salary out of it from us for the general manager to get this thing going if we give you $1 million for this business. So certainly, but I think we're in a better situation. Adam, you asked a question for the timing, and I didn't know. On hindsight, it looks like had we bought a business at variable rate, thinking that we are making 6% spread from 4% SBA to a 10% profit, maybe a year or two back, we would have been underwater right now, right? Because and by the way, my business partner in Los Angeles, Orange County, told me he met a person who is so frustrated that he is just running the business to pay SBA right now. And that's a actual real story. Yeah, go ahead, Mark. You want to say
Oh.
something?
I was just say, wow, that's
Yeah,
not fun.
because yeah, that's not fun, and if you opt for a variable rate and by the way, I'm not qualified for SBA because I'm a foreign citizen, Canadian citizen, foreigner, so I don't qualify, so I don't know. But anyway, I think it was a great conversation.
Sandeep, can I just ask a quick question of the group? I just was curious to know whether anybody's thought about sort of tapping private credit instead of SBA. I mean, there's a big enough spread between kind of deposit rates and what the SBA is charging that, I would think that sort of there's pretty strong appetite across private credit to get a slight premium on deposit rates. So when I find a business, I'm not going to limit myself to SBA funding as the source of a loan. I think there could be a decent amount of appetite and for the right business in the private credit market.
James, how do you find that? I don't have, is that, you said you worked in an investment bank for a while. Is that a world well? Do you know how to tap that? I don't come from that world, so I don't know.
I mean, it's a world I know reasonably well for big deals. I don't know it as well for sort of small business deals, but I think there are enough sort of equity investors in the small business space that it wouldn't be that difficult to find people associated with these firms who might be willing to extend private credit, maybe alongside an equity investment, and so there's that side of it. And then, I'm fortunate enough to have a sort of, New York-based kind of network of people who've done much better than I've done, who might be looking sort of for places where they can, put a few $1 million for a few years at a decent rate of interest, so those are the sort of angles that I would be looking to play.
But you think that people would do that for under 10% though? Like, why would they do that?
I mean, Eric, I think it depends on, the person and the purchaser of the business, right? I mean, I don't think you would do that if you didn't know who was buying the business, if you didn't have a, relationship with them, if you didn't know kind of what their capabilities were. You'd obviously want to sort of minimize your risk, but I think there's the possibility that you could get cheaper money, a cheaper bank loan or a cheaper loan in private credit than the SBA are offering.
I was recently working with a buddy of mine to acquire a registered investment advisor, and we were looking at a really small one, and we talked to Live Oak and we talked to a couple other banks and for non-SBA loans, and they were quoting somewhere between 8 to 10% interest rate, but they were fully amortizing over 5 years. So yeah, you might be able to get a slightly lower rate, but they're going to get you with the amortization a lot faster than you could get with the SBA.
Yeah.
Fair point.
I mean, it makes the debt service coverage ratio a little more challenging over 5 years versus SBA 10 years. So it puts a squeeze on it a little bit. So, but
awesome. So anything else, or should we wrap up today and then maybe catch up again in 2 weeks?
I would love on the next call to get people's view on employing interns to help them. I've been sort of inundated with emails. I guess a lot of rising sophomores are looking for work over the summer, and I don't know whether if anybody's had experience putting some of these young people to work.
I have not yet, but one thing is for sure that I'm very surprised, at least when I was educating, or at that time there was no searcher, and anytime many years back, but even a few years back, I didn't see that there were many university MBAs and graduates coming out and calling themselves searchers and then looking to buy the company, right? So I think things are changing, and let's talk next time. I'll make a note of this in my diary, and then next time we can
Yeah.
start from there. And maybe sometimes the different audience, different people join in and they give different perspective on the same topic, because ultimately we are going to talk about 10, 15 things every day, every week, right? So
Hey, can I ask a quick question?
Yep.
I'm thinking of going to the MIT. There's a conference this weekend. Have you guys gone to some of these search conferences? And has it been useful? Because it's like a 3-hour drive for me, and I'm just trying to see if it's something that would be helpful and interesting.
I have not.
I haven't been to one, but I actually am going to be going to the MIT conference. So maybe I'll see you there. But I've had other classmates of mine that have gone to them, and they've said it's been helpful, especially like for trying to meet investors. I think that's like where it's been most helpful for them. And for your perspective, trying to meet searchers, trying to, as a service provider, I'm sure you'd meet a lot of searchers, meet a lot of investors.
Okay.
Oh, thank you. Okay, cool.
Awesome. And we learned something, that there are certain search conferences like that. Thank you, Eric. I was not even aware of that. So I will search for those and see if there are any in the Bay Area, and then start attending them. Okay, so thank you very much, everyone. And let's see each other in 2 weeks' time and share some of the challenges and successes.
Thanks for hosting, Cindy.